Ladies and gentlemen, welcome to a new episode of the Fintech Hunting Podcast. We have a very special guest for you today. She's an industry thought leader. She's an expert in financial services. She's an economist. She knows all things numbers as it relates to financial services. Please help me welcome Selma Hepp, Executive Deputy Chief Economist at Corelogic. Selma, welcome to the show.
Thank you. Thank you so much for having me, Michael. I love that introduction. I feel very powerful right now.
Oh, well, you certainly are, and it is great to have you. So, Selma, for our listeners who haven't had a chance to speak with you or hear a lot of the incredible insights that you share, tell us a little bit about your background professionally, and specifically, what do you do at Corelogic?
Sure. I'll start with Corelogic. So I've been with Corelogic for 2.5 years as Deputy Chief Economist, and here at Corelogic, I have a team of about 6 people, and we take our Corelogic data assets and we provide thought leadership pieces. We analyze the data. We try to dig out trends, try to find turning points in the housing market, try to understand what's happening overall in the property markets world. Before Corelogic, I was a chief economist at a company called Pacific Union. It was a Bay Area brokerage company, real estate brokerage company that was acquired by Compass Real Estate. So I think that's now a much better known name than what Pacific Union was. And then prior to that, I was chief economist at Trulia. I was also an economist at the California Association of Realtors, and then economist at the National Association of Realtors. And then I actually spent some time working at HUD when I was working on my PhD at the University of Maryland.
Fantastic. Well, like I said, you have a wealth of knowledge and expertise. We are so happy to have you on the show today. So, Corelogic has been in the property data business for years. They dealt with millions of lines and pieces of data. Talk to me a little bit about how important it is to have accurate data so that you can give economic analysis, and how you perform that analysis. How critical is it to have that data and have, more importantly, that accurate data?
Right. I mean, so data accuracy and data frequency is so highly valuable right now in our fast changing world. I mean, this became particularly obvious during the pandemic, where with the shutdowns and not knowing what's going to happen and having sort of the worst outlook for the economy and the housing market, we really wouldn't have known where we were if it wasn't for that, what we call high frequency data. And that's what we have at Corelogic. So basically, we're able on a daily basis to observe trends that are happening in the housing market and to determine, again, I mentioned, I mentioned the turning points in being able to observe turning points in the market sooner. So, as a result of the data that we have, we really are able to then be the thought leaders in the housing market. And so in addition to the high frequency data that we have from MLS, for example, we have other data that allows us to look at what's happening in the housing market, such as mortgage data, such as mortgage application data. So in addition to looking at where home sales are happening, we're able to observe where people are applying from and moving to. So we're able to observe migration trends as well. And then another thing that's, was very interesting, it's very interesting, particularly in light of a lot of the hazards and a lot of the climate change things and natural hazards that are happening. We're able to observe mortgage trends information. So if there is a hurricane that comes through an area and people lose jobs and they're not able to pay their mortgage, we're able to keep track on what's happening with those mortgages as well. So we have a wealth of information that really allows us to keep a pulse on the market.
All right, well, let's start talking a little bit about the market. Homes are being snapped up almost instantly in a number of different geographies and demographic areas. Do you think this is due exclusively to economic factors, or is there a technical element that makes it possible for the buying process to occur before a lot of properties ever even go on the market?
Yeah, no, that's a great question. I mean, I think there are both factors at play right now. On one hand, we do have macroeconomic factors that led to surge in demand over the last couple of years during the pandemic. But on the other hand, we have had technological advances where, we're as a buyer, as a consumer, able to find out much sooner that the home is, coming soon. Say, that was one of the things that transpired out of my work at Compass, but coming soon, so homes are, consumers are informed much sooner about homes coming on the market. And so they're able to make offers and to start the whole mortgage process much sooner than they used to in the past, where in the past, your realtor would let you know, hey, there's a home for sale. Then you would go look at it. You would go, then apply for a mortgage. Now you can do it all virtually, So if you see a home that's in another state, in another country, you're able to do a virtual tour. You're able to use AI in the process. So everything has now led to much more expeditious process of buying a home.
Well, and that technology from those examples that you've given has clearly changed kind of the property data ecosystem of access to information, the breadth of information that's available. Like you said, you can do a whole virtual tour. You can already get pre-qualified for the mortgage. You can do the whole walkthrough, and all of that can happen, I don't want to say instantaneously, but very, very quickly compared to waiting till your real estate agent says, hey, here's a new listing. Do you have time to see it this evening or this weekend? Yeah. Things can happen very, very quickly. Let's talk a little bit about, not only are home buyers trying to get into homes and everything like that, and they have tools at their disposal, but let's talk about the emergence of iBuyers and other sources of sales data outside of, the MLS altered. So how does that impact what's going on in the market?
Well, yeah, so competition for real estate asset has intensified incredibly over the last few years. On one hand, this has to do with changes in the tax code, so some incentives there for large corporations to own real estate. On the other hand, there are macroeconomic conditions. So the number of people out there looking for homes has intensified. But one relatively recent emergence, in a sense that there are so many more firms out there now trying to buy homes that are non-traditional buyers, as you said, iBuyers.
Going trend that has buyers, snapping up homes as soon as they're on the market. Do you think this is due exclusively to economic factors? Is there technological factors? And how do iBuyers factor into that?
Right. So, during the pandemic, we didn't only have an increase in traditional buyers, but we also had an increase in iBuyers. And technology certainly helped with that increase because iBuyers were able to obtain home valuation models and understand what's happening in the housing market without having to even go into those homes. So on one hand, we had an increase in buyers such as, millennial buyers, such as buyers buying second homes or investment properties. And then we had also an increase in iBuyers from those companies that are just remotely, in a sense, buying homes. And so all of that actually led to increased competition in the real estate market. And so we have private equity firms acquiring housing. We have consumers looking to move to more affordable areas or areas where they can work remotely. And then we had inflation alongside of all of this, which impacted the ability, how much a home buyer can buy. And so they were looking for more affordable locations. So all of the taken together led to home price appreciation rates that we haven't seen since back in 2000 and before the 2008 housing crisis. So we've had an incredible surge in home activity due to not only macroeconomic factors, like you said, but also technological advances.
Let's talk a little bit about, with these iBuyers and other sources of sales data, that's traditionally outside of MLS. So how has that impacted your ability to gather and analyze data on the housing market?
Right. So that's one advantage of Corelogic data sources, for example, is that we not only have MLS data, but we have property records data, and all housing transactions, all transfers of real estate ownership take place or are recorded through property records data. So we are able to observe these iBuyer transactions through our property records data. And as a result of all of this, we've actually developed a investor indicators. So in our data, we're able to track if one is an investor buyer or if they're just, traditional buyer. And so that's how we were able to observe a surge in investor activity over the last year. So, just to give you some context, before the pandemic, investor presence was about 15 to 18% of total home purchase activity. That share increased to almost 30%, and in some markets was as much as 40% during the pandemic. And we are able to, again, track all of this with our property records data in Corelogic.
So as you start tracking that, what kind of impact has that had on the market? So I'm Joe, home buyer. I'm trying to get my first home. And I don't even know about the presence of these iBuyers. I don't know that this is taking place. What does that mean for the market going forward and the typical buyers, the first-time home buyers versus all of these iBuyers and other people competing for the same homes?
Right. Unfortunately, that has created more challenging conditions for traditional buyers, particularly first-time buyers, because they don't have that cash to come in and do an all-cash purchase, nor do they have very large down payments to make themselves competitive. So, I think during the pandemic or during this time when we had a surge in investor activity, or just overall increase in interest in home buying activity, that has impacted first-time home buyers and, our average Joes, like you said. But, as a result, too, there's been some new models out there, and technologies can certainly help with that, that are trying to help people come into the market. So we have different co-ownership models, or we have companies that are trying to provide people with down payment assistance programs, or they have, they buy a home together and, with the appreciation, keeps some rate of appreciation, but help people buy their home. Or they will help people who are equity rich, for example, where they can, they own a home and they have a lot of equity, but in order to extract that equity, they have to sell a home. But it's very hard to sell a home if there's nothing else to buy there, or if there's that uncertainty of what is, so they're helping people through that transition process. And, a lot of these tech companies nowadays are trying to help facilitate that process and help that velocity in the market, and help people buy homes.
Excellent. We've talked about technology some, and there's a lot of great technology that has automated processes. It's helped people secure mortgage closing deals. The whole goal is to speed up the overall transaction process. What is your data telling you of have those tools really sped up the process? Have they impacted the market? Or is that still something that we're still searching to get to?
Yeah, I certainly do think that it has sped up the process, and we're seeing that in the data. So, for example, if you look at days on market, that has gone from 30 days to some 12 days at, when the market was most competitive, and cash transactions certainly help with that, because if you have a cash, you don't have to go through a mortgage transaction. But mortgage companies have become much more efficient in going through the process of appraisal. So now you have automated appraisal, and you have these companies that have fully vertically integrated technological platforms that provide that end-to-end solutions. And then, once when a consumer comes onto the platform, they are able to go through the entire process of, submitting their documents, verifying income, getting the appraisal, getting even the inspections, all within this one integrated platform.
Excellent. And in your view, what other ways has the emergence of property tech influenced market statistics?
Right. I think it's in a lot of ways it has confused us at first because, so much is happening that we are not sure. When we're looking at the data, we're not exactly sure what is happening. And so I'll give you an example with these investor purchases. There are companies now that are purchasing homes for people. I mentioned when people have, when they're equity rich and they have a lot of equity in their home and they want to transition. So now an outside company, a tech company, is going to come in, purchase their home, give them cash, and help them buy that other home. And in our data, that can come through looking as an investor, but it's not necessarily an investor. It's just somebody trying to facilitate a purchase. So, so there are these things that are happening that we're not able to observe necessarily, or we're not exactly sure what we are yet observing in the market.
Gotcha. Let's talk briefly. Can you talk about the emergence of blockchain in the industry? And do you feel that this has helped make transactions more tamper-proof and reduce the prevalence of mortgage fraud?
Right. I mean, I think we still have, blockchain is still in some way in nascent stages of utilization in many industries. And, we do still see a lot of mortgage fraud out there, and mortgage fraud stems from many things. There's, income falsification, there's identity fraud, there is in unemployment or employment inconsistency, there's undisclosed debt, there's all kinds of things. But I think what a blockchain is helping a lot is with this credit scoring or risk scoring. So it's there are companies out there that are building a protocol that are managing to identify the risk and credit score people using blockchain technology, because everything that their entire financial history is basically being tracked in this blockchain technology. And then one of the more obvious utilizations is in the title or transfer of deeds or property deeds, liens, and land titles. And so I think that's one of the other uses. But I think going forward, we're definitely going to see more blockchain technology being used. So actually, there was an interesting piece I recently read about use of blockchain in tokenization of real estate ownership. So basically, a real estate asset is converted into a virtual token, and then the tokens are then sold for sale. So there was an offering in 2020 where security tokens that represented a fractional ownership of a luxury property in Colorado were sold off on an exchange platform, and there was basically a blockchain platform selling tokens of real estate ownership. And so this article actually suggested that tokenized real estate could be as much as $1.4 trillion valued asset by 2026 by only tokenizing 0.5% of the current real estate market globally. So it's a lot out there that's going to be happening going forward in terms of blockchain and tokenization.
Absolutely. Fantastic statistics and really amazing. I had not heard that example before, so I'm glad you shared that with our listeners. How do you envision increased automation affecting the housing market in the future? Whether it's finding a house, buying a house, insuring a house, where do you see that impacting it going forward?
Yeah, I mean, I think in so many ways. So, I mentioned access to cash, by people that have equity in their cash, and then being able to utilize that cash, to whether maybe help kids with a down payment for their own home. There's also companies out there that help people build equity through rent to own programs, right? So they're renting and in the same at the same time building equity because some of that rent is going towards ownership, and then but there are so many there's so many developments in the market. So in terms of the insurance market, for example, we are able to so much better to do property scoring because we have that satellite imagery and all this data about the composition of the property, distance from certain hazards, or just understanding height, in terms of flood risk, for example. So we are better able to understand financial risk and have forensics to understand financial impacts of climate change, for example. And then, in terms of the commercial, for example, commercial real estate, just asset utilization, how do you co-work or co-share space? This can be also applied in residential space because, like Airbnb is one of the example, because now you can much better utilize an asset because you're able to use technology to have people, continuously rent that property. So I mean, there's just so many ways that people will be able to buy and utilize that real estate and the process is going to be so much more efficient going forward.
Selma, you have so many great insights. You have such access to so many different data points. Any other trends that you want to share? Any other observations that you see in the market as we wind down this year of 2020 and kind of a little bit of what's on the horizon for 2023?
Yeah, I mean, I think, we are in a transition stage, and transition stage is always uncomfortable, can be scary. And so we've seen significant slowing of activity in the housing market, and that has brought on a lot of questions about, what's going to happen in the housing market. But I think, the underlying fundamentals are still very strong, and U.S. consumer is still very strong, certainly much stronger than it was last time we had an uncomfortable financial event such as the great financial crisis, and so I think while the housing market will slow, while the home appreciation will slow, and that will raise some flags, I think that will provide a lot of opportunities for people that were not able to participate in the market, such as, our average household with not a lot of income, with not a lot of down payment, and they will be able to come into the market and maybe purchase a home, or hopefully purchase a home. And all of these technological advances that we've seen in the housing market are actually helping those guys as well. And so I think, overall, my outlook for the housing market is it's actually really positive. I think we just need to go through this period of readjustment from a time where everything was overheated. 2021 housing market was unsustainable, and so we had to move away from that. And so I think we're just moving in a more of balanced market between buyers and sellers.
Selma, you have shared so many great insights. I know our listeners are going to go take notes. Thank you so much for being a guest on this episode of the Fintech Hunting Podcast.
Thank you. Thank you so much for having me, Michael.